My name is Jeff Sailing. I'm one of the co-founders at StartUpNV, and welcome to Pitch Day for 500K. Today, we're going to hear from Mike from DABL and Bennett Kim from ZNest, and also appreciate Mike, Jay, and Bennett for going through the rigors that we put them through to get up here and speak on Pitch Day. For anybody out there that's new to our program, StartUpNV is Nevada's statewide nonprofit startup accelerator and incubator. We operate 7 free entrepreneurship programs supported by government grants and corporate sponsors. We get additional financial support in the form of donated equity from successful accelerator companies and profit sharing from our 4 affiliated investment funds. Our fortnightly pitch days offer companies an opportunity to join our accelerator program with investment from FundNV. Our investor syndicate adds to that, and then that whole total is then matched by the funds from Nevada's SSBCI program. Now, since 2021, we've directly invested over $12 million in 25 different startup companies, plus another $6.5 million of PIPE, or public investment in private equity, for one of our companies that went public. Our startup investments have grown to over $44 million in assets under management, a little over 4 times their original value. Partner co-investments in Nevada's SSBCI and others have amplified our impact significantly, adding more than $25 million to what we've invested. So that's, if you've done all the math there, it's about a little over $35 million that's been invested in our startup community since 2021. Now for the legal disclaimer. The pitches today are for investment from our legally compliant venture funds and syndicate, restricted to SEC accredited and Nevada certified investors. We welcome the community to attend for educational purposes, kind of like watching Shark Tank, but hopefully a little nicer. But these pitches are not a general solicitation for investment. Special thanks to our sponsors, the City of Las Vegas, Clark County, Governor's Office of Economic Development, the EDA, and the USDA. So that's it. Usually I have a couple of announcements, but since we're running a little behind, we're just going to dive right in. All right, gents, come on up and start your sharing.
Okay. Hey, everyone, I'm Mike, co-founder and CEO of DABL. And at DABL, we're building an automated hedging and risk management solution to mitigate the pain that volatility brings to crypto businesses. I've felt the negative impacts of volatility firsthand. When I was in college, I aspired to work in finance on Wall Street upon graduation. However, I had the misfortune of graduating college during the onset of the Great Recession. So instead of working on Wall Street, I spent my formative years after college in the Marine Corps. And while New York is certainly viewed as the epicenter of the Great Recession, I think a lot of people here, especially in Nevada, can agree it was felt very acutely right in this state. In fact, during this time of the Great Recession, Nevada earned the unenviable position as the state with the most foreclosures in the country for several years running, which led to numerous bank failures within Nevada, and that included Henderson-based Washington Mutual, which at the time was the largest bank failure in US history. And while much has changed since then in the past 15 plus years, a lot still remains the same. And things just seem to happen quicker and at a faster cycle now. For example, it took 30 months for Las Vegas metro area to see a 60% decline in the real estate values. But in crypto, Ethereum did this in less than 3 months this year in 2025, which is pretty incredible because Ethereum right now is hovering on all-time highs, just highlighting how crazy volatile the crypto markets are. And the problem with crypto markets is just that they are very fast. They operate 24/7, 365 days a year, which makes it a very challenging environment for businesses to operate. And one of a prime example of that is lenders. So while the concept of crypto-backed loans is similar to a mortgage, in this case, there are no foreclosure processes. If a loan backed by crypto starts becoming at risk to becoming underwater due to the collateral value falling, the crypto will be quickly liquidated. So it's sold off into the market to protect the lender from losses. The problem here is this is actually a very sticky business, or sticky clients in this business. Borrowers typically come back and they keep taking out loans. So the lender's constantly earning that origination fee multiple times a year. So they really don't want to do this. They don't want to upset their clients by doing this, but lenders have to protect themselves. So what do they do here? Frankly, they're in between a rock and a hard place. They can lend conservatively, perhaps 40 up to 50% for a loan to value ratio, but this severely limits their revenue potential. On the other side of that, they can lend aggressively, but then they're at much greater risk of having to liquidate their clients. In fact, this year from February to April, there was over $1 billion of crypto loans liquidated from lenders. And before I started doing DABL full-time with Jay, I was involved in some of that when I worked at Figure. So DABL solves this with our automated risk management platform, and it's built to simplify the hedging process for lenders and other crypto institutions. We're making the complexity of hedging and making it simple and seamless for them. Our platform automates the entire process. So from the portfolio upload through our ML-led risk engine, smart execution, and 24/7 automation. DABL uses institutional grade strategies like delta neutral, where the underlying instruments here are regular way or perpetual futures, and we built it modularly. So we can work with an array of different assets, whether those crypto and even TradFi assets that are coming on chain, and it's set up to execute across many different venue types. Centralized exchanges, decentralized exchanges, so that's Coinbase, Hyperliquid, and even if a client wants to go a regulated futures way on a CME, we can handle that as well. So now if you're a lender, you can earn that revenue of lending aggressively with a much more conservative risk profile and lowering your chances of having to liquidate your own clients. So our market opportunity targets crypto, institutional crypto that have active hedging needs. So who is this? This is like lenders, obviously, validators, treasuries, funds, and really any sort of institution that has to deal with daily collateral risk. Our TAM is 175 billion, and that represents 7% of the 2.5 trillion institutional crypto space that actually requires active risk management today or in the near future. Through our existing relationships and partnerships, we have about direct access to about 8 billion of that over the next 2 years, and we believe realistically we can capture about 40% of that direct pipeline, so it comes to about a little over 3 billion. And for our SOM, this is derived from our 4% targeted take rate, which gives us $132 million revenue opportunity over the next couple of years. Competition in the space includes, of course, in-house solutions, traditional finance risk companies that do this on the traditional finance side, and of course, other crypto startups in the space. Looking at traditional risk platforms like Chatham Financial, they're the kind of the big dog in the house. They hedge about $1.5 trillion worth of assets under management annually. I was a formal client of theirs. It is extremely manual process, and I don't see any, they're not set up to be successful with crypto, just the speed and it being a 24/7 market. There's derivatives path, also more in the TradFi side, and they're a bit more tech forward, but again, don't operate anywhere near crypto. On the crypto side, there's crypto native firms like Chaos Labs, and they primarily focus more on protocol and DeFi risk, including smart contracts, much less so on the institutional market risk like we're focused on. And that's where we differentiate, is taking kind of institutional grade risk approach and pairing it with on-chain infrastructure, 24/7 monitoring and automation. So our pre-revenue, we're targeting revenue generation in Q4 of this year with our pilots and beta clients. Earlier this year, we went through Techstars, graduated in June. During that time, we built our MVP. We just released our V2 into production last week. And we've been live testing with our initial pilot client, Lantern Finance. They're a specialized crypto lender at about $15 million, also Nevada-based. And we'll begin live testing with Velocity, which is a RWA pool, and we'll be hedging coin collateral for them that will be used for off-chain or real-world asset type yield opportunities. In Q4, we're looking to go live with Validation Cloud. This is a staking validator who stakes Ethereum and Solana and some other tokens. And we'll be hedging both the crypto price risk, but also crypto native rates around staking. So we can actually hedge these staking rates to smooth out volatility in that as well. And lastly, we'll be looking to go live with Blockearner. Blockearner is the largest crypto lender in Australia. We'll be helping them with their kind of traditional crypto lending business, but also working with them in this new Bitcoin home loan program they're looking to roll out at the end of the year, possibly in Q1 2026. So how do we make money? Great question. We target a 4% take rate, like I said earlier, and that's volume-based. And the main driver of this comes from funding rates. These range between 7 and 12% for the majors being Bitcoin and Ethereum, and we'll look to collect 30 to 50% of that, with the remainder going to the client that they can use to add to their margin account. They can claim it as revenue. That's up to them what to do with the rest of that. We're also charging $2,000 a month for our our platform fee, but that's really geared to be a minimum usage to make sure that we're not going and onboarding clients and they're not using or paying us. A lesson learned from a prior startup with Jay over here. And lastly, we're going to be implementing margin financing in the first half of 2026, but the request of some of these pilots, and we'll be tacking on a 1% to 2% spread onto the benchmark that we'll be financing the margin at. So this just prevents them from having to go and move funds into their margin account, and they just want it more operationally efficient, so they're just paying kind of the rate that we're going to charge. And to put it all together as an example, using Blockrunner, we're targeting to get $15 million worth of volume with them in 2026, which would equate to about $2 million ARR for them in the next 12 to 18 months. So our team brings deep expertise in the space. My co-founder and CTO, Jay, and I met in 2021, where we were on the founding team at Pangea and built an automated FX hedging platform. Jay brings over a decade of expertise in both crypto and fintech. And for myself, before DABL, I built and ran the hedging program at Figure, which saw over 400 million in monthly volumes. And prior to building with Jay at Pangea, I worked in structured finance at HSBC and securitized products trading and structuring at Bank of America Merrill Lynch. So we're raising $1.5 million pre-seed at a $10 million post-money valuation with a 20% discount to accelerate development and growth. The use of funds are divided by half going to product and development to continue the build there, and to scale our client base, and biz dev to scale our client base, and remaining going to ops for audit, compliance, etc. I guess that's the 10-minute, or okay, I'm blessed. So our vision is to not only provide greater stability in crypto, but also help mitigate volatility across various markets as assets continue to move on chain. So the next time in Nevada is in the news for a financial crash, it won't be as the headquarters for the largest bank failure. It'll be for the headquarters for the company that prevented said failure. Thank you.
Thanks everybody for coming out today, and thanks for everybody online for joining us today. A few quick reminders as we wrap up. If you're out there and you're thinking, wow, okay, those numbers that Jeff was spouting off right at the beginning about turning 12 million into 44 million, and hopefully soon a lot more, and you want to in on that action, then go to the same place, startupnv.org, follow the I'm an Investor path, and you'll get access to looking at our FundNV, our 1864 seed fund, our work with the Sierra Angels, a traditional angel group, and our company-specific special purpose vehicles as well. So everything starts and ends at startupnv.org, and then you can branch off from there. On social media, we're on LinkedIn and YouTube, so I'd appreciate it if you'd follow us there and keep up with us. Thanks to today's founders for pitching today. And thanks to everybody who attended. Thanks for coming out here into this beautiful, Brian's not in the room, but thanks to Brian for lending us the space. It's a really awesome facility here. So if you haven't been out to Woven here in downtown Las Vegas, come on out and visit it. It's like it's like stepping back into like 1975. I hope I didn't get the year wrong. Brian would be like frowning at me if I got the year wrong, but it's very cool. And thanks to our team at StartUpNV for putting on another great pitch day. And we will see you back here in 2 more weeks to see 2 more founders pitch. And until then, take care of yourself. And if you can, someone else too. We'll see you back in 2 weeks.